Welcome to our series using fractals to improve your trade selection. As always, we need to remind you trading is a risky endeavor and not suitable for all investors. My name is Jay Norris, and I'm a 20-year trading floor veteran of the Chicago Board of Trade. I've also written a couple of books on trading which were published by McGraw-Hill and that serve as the textbooks for our courses. Let's go right to the chart. Here you can see we have a dollar-yen chart. It's a 4-hour chart. And you can see that 764 retracement right there, 0.764. We're calling this the saga of the 764. Let's pop out to a weekly chart so you can see what's going on here. Okay, there you can see the 764 level. And I'm going to show you where this came from. Let's remove that, home in on the chart a little better. We take the 2011 low up to the 2012 high, and we can see the market retrace right at 764. 764 happens to be a Fibonacci number also. Generally, when you have bigger moves like this in the process of reversing, you're going to get steeper retracement. So that's where we look for that 764. A healthy trend tends to give her shorter retracements along the line of 50% or 618. However, larger moves tend to give you steeper retracements. We suspect that's why we got that steeper retracement, the 764. Now, it happens to be a Fibonacci number, but yet it was the market that gave it to us. The market told us that level was significant when it bottomed on it here. Well, let's remove that. We're going to take the 2012 low to the 2012 high, and we can see once again market bottom right on 764. You had a little double bottom there. See, well, this is a larger double bottom, but you had a double bottom within that, the right leg of this double bottom, where you had a couple of weeks there where it was bottom. You can probably see that a little more clearly on the daily chart here. So nice formation once again right on that 764 number. Now let's drop down to a 4-hour chart, and we're going to take the low of this move and measure it up to the high before this last rally. And we'll see where that comes in at. Right there, 764. So you can see you had another double bottom just ahead of that 764. So we know that 764 level right there is a significant level. We know that you couldn't close below it. In fact, you couldn't even get to it. So the yen remains strong. So we would be aware that if we have a trend line break right here, as we did over the last couple of days on this 4-hour chart, that this would be an area of interest on the chart for us because we had two long-term patterns aligned. So you get two patterns, they both happen to be 764s aligned. That's something we need to focus on. Now, it is only two patterns, by the way. I would prefer to be highlighting trades with three patterns. The dollar yen, it's interesting. You know, you're trying to take out this trend line. You haven't quite taken it out yet. You need to close above it a couple of times to lend credence to that move. But probably more important, what I'd really like to see is I want to see this last leg down, this last impulse move down in July. I'd want to see that retrace on a closing basis at least a couple of times beyond that 50%. Oh, and look at that. It happened to stop right at the 50% too. I'd really like to see a couple of closes above that 50% before I would have an interest in buying that next dip. Then I'd really look for a more normalized dip, perhaps a shallower dip to get long this market. Currently, very interesting chart, yet you only have two patterns. Now, you may be wondering why I picked this high and not that high. Well, you didn't take out that trend line. If the market had taken out that trend line right there, then I would use that level. It did not take out that trend line. It didn't even come close. The trend line it did take out, however, would have been right there. So that's why I would choose this high to have drawn that retracement. And that's why this 50% level there at 78, well, 79 even or so, rounded up, that's a significant level. And it looked like the market got stuck there first time up. So let's keep an eye on that 79 level. You get a couple of closes above that 79 level, then I'm definitely very interested in looking to buy a dip in that market, and we'll see if it gives us that all-important third pattern. Currently you have two bullish patterns, but you still need to get beyond at least that 50% level of this last impulse move down. So we'll keep an eye on that for you. For more detailed information on our courses and what we teach, you can go to trading-u.com, where for $199 you'll get instant access to our eCampus, where you'll receive our Core Concepts course, our Advanced Concepts course, our graduate courses, along with past master's course archives. We look forward to meeting you. Our new semester starts in September. If we don't happen to see you then, we look forward to picking you up in the winter semester. Thanks so much for coming and seeing the video, and we look forward to hearing from you soon.